Okay, so I think it's already 6:05, and maybe we can now start with our session.
Good.
And then, yeah, sure. Thank you, Reba. So, hi everyone, and welcome to our February 2026 online divorce real estate and lending options class. I'm Angel, one of the proud team members supporting Team Reba, and we're excited to have you here as we explore the intersection of divorce, real estate, and lending with two top experts. Joanna Liao, a certified divorce lending professional or CDLP, and Reba Haas, a certified divorce real estate expert or CDRE. Before we dive in, I'll guide us through some things in our Zoom features for us to stay interactive and connected. So let's warm things up in the chat. Can you type in which city or county are you joining us from today? Can you type in where you guys are from? Just so we can also check if the chats here are working. Sammamish for Jamie, Redmond, and Snohomish. Yeah.
Okay.
Thank you. Thank you, everyone, for replying. And we love seeing the reach of our community here. Also, last thing, if you have questions at any point of this conversation or discussion, just click the Q&A button in your Zoom controls down at the bottom of your screen, right down there, and just type them in whenever you need to. So please indicate whether your question is for Reba, Joanna, or both of them. We'll answer those live both after presentations. So let's get into the good stuff. Joanna, you'll go first. Please walk us through lending options and mortgage planning during divorce.
Oh, did
Is
we lose
Joanna
her?
here? Yeah,
Did we just lose her? The Zoom
Let,
yeah,
window starts.
huh,
Her note taker's here, but
yeah. The note taker's here, but she's not
that's really
around.
odd.
she
Let me
just
text. Let me text her.
Oh, there she
she's
is.
coming back in.
Yeah.
Lost her.
Oh, my
Hi,
apology.
Joanna.
Hi, my internet connection was a little fuzzy there. Okay, sorry about that. I am back and I will be sharing my slides.
Tell your husband or son to stop playing video games.
Right, that's right. Stop hogging all the Wi-Fi. Okay,
That's right.
all right. I'm going to share and then just let me know when you see my slides.
Yep.
Okay, fantastic. All right, great. Well, sorry for that little interruption, everybody. So I'm really glad to be here with you all today. Just before I start, I just want to give a big thank you to Reba and her team for organizing this event. I really appreciate their efforts to bring everybody together today, and I'm really happy to have the opportunity to share this information. I've had many past clients and divorce professionals tell me that what they learned here really helped them have a better understanding of how mortgages and real property are affected during divorce. So that I hope that this information is helpful for you as well. Okay, just to introduce myself, my name is Joanna Liao. I am a local mortgage broker here in Seattle, and I'm licensed to originate loans in Washington as well as across the US. I handle traditional types of mortgages, purchases, and refinances, but I also have a special expertise and interest in divorce mortgage lending. I hold a CDLP designation, which stands for Certified Divorce Lending Professional. And this CDLP designation just means that I've completed additional training to really understand the specific mortgage guidelines that apply in divorce situations and the unique issues that divorcing homeowners face. The training also involves a deeper understanding of other aspects of the divorce, like family law, financial planning, taxation issues, etc. So the certification definitely gives a greater understanding of not only divorce mortgage, but all the other issues and professionals surrounding divorce. As we all know, the marital home is usually the biggest asset that a couple owns, and decisions about what to do with it can affect, every other aspect of the divorce and the financial settlement. Most mortgage lenders focus mainly on traditional transactions, and they might only work with a divorcing client once in a while. But because I'm known for my expertise in this area, I work with divorce clients pretty frequently. And so I'm very familiar with the nuances, challenges, and opportunities that come up during this time. So just a little personal, background of how I came to this designation and why I have the heart to help folks during this difficult transition in their life. My sister and business partner, Sandy, went through her own divorce about 4 years ago. And at that time had a lot of questions about, the mortgage on her marital home, as well as the 2 investment properties that her and her husband at the time owned. Her attorney gave her, some pretty good general advice and told her to ask, specific questions to her mortgage lender, the one that helped her and her ex purchase their home. But their situation was a lot different and, during the divorce and way more complicated due to the separation. So I helped her look into different options on how to divide the marital home, split the home equity equitably, and evaluate what to do with investment properties. But it was through this process that I realized there was such a lack of knowledge and advice on divorce mortgage lending. And most attorneys and mediators don't even know that there's such a specialty as divorce mortgage and how this could help their clients in working out the details of their financial division in the divorce. I've also seen firsthand many clients that I've worked with since then, what can happen when important details in divorce are missed, even by experienced lenders, simply because they don't deal with these situations very often. So that's why I always encourage anyone going through a divorce to work with a certified divorce lending professional, whether that's me or someone else. Having an expert who truly understands that intersection of mortgage, finance, real property and divorce can really make a big difference in your future mortgage financing opportunities. Okay, so I'm going to talk today about what divorce mortgage is. A lot of people have never heard of what a divorce mortgage planning is, and they sort of assume that getting a mortgage or refinance will be similar to their experience of it in the past, but it's really not. When you bought your first home, you likely had 2 incomes, joint assets, and shared credit. Now, as a divorcing homeowner, you're moving, from one household to 2. You might need to buy out your spouse's equity share of the home, qualify with just only 1 income, and try to use support payments to qualify for a refinance or a new mortgage, or maybe pay spousal or child support, all of which can change how a lender views your financial picture. Also, what about, capital gains taxes and the timing of the purchase or refinance? Can you buy or refinance a home before, during, or after the divorce? So divorce mortgage planning really helps you explore your options, understand what's feasible, and avoid any unexpected surprises in your future mortgage options. Okay, so in my experience, most homeowners going through a divorce want to know, right from the start, what they can do regarding their house. They may have an idea of what they want to do with the house, but they don't know if it's feasible or not. Does one spouse want to keep the home? Do they need to refinance it into one person's name? What if one spouse's name is on the loan, but both are on title? Can the spouse that's staying afford to buy out the other? How much equity do they have in the house? And how do you calculate that? What if they got a great interest rate and they don't want to lose that? Can an ex stay on the mortgage even if they're getting divorced? And what are the consequences of that? And would that affect, one person's ability to buy a new home? Or do they need to just sell the house? And what options do they have to purchase a new home? So lots of questions and issues can come up regarding the house, and it may affect taxes, capital gains, support income, retirement account division, And so this is where divorce mortgage planning comes in. When I meet with a client, I usually start by, talking with them and understanding what their goals are regarding the marital home, and also take a look at the rest of the finances, at their budget and numbers to see if it makes sense financially. Like I said before, the house is usually the biggest asset that people own, but it goes beyond finances. The decision on what to do with the house can also be very emotional. Sometimes my clients say, well, I definitely want to keep the house. Okay, well, that's a good start making that decision. But why do you want to keep the house, and for how long? Is this the house, that you want to keep until you retire, or just until your kids finish school? Because that might affect the type of mortgage products that might be most suitable. And looking at your budget, can you afford to keep the home on your own? What if there's deferred maintenance on the house? Who's going to be responsible for those repairs if one spouse is going to keep the house? And what are the tax consequences of keeping the home? So all of these questions are important, and part of my job is to talk through and ask about these issues that you might not have even considered regarding the marital home. And I would say that the most common emotion people feel after speaking with me is just a sense of relief, because now at least they understand their options regarding the marital home and their properties, and maybe qualifying for another mortgage to buy something else. Because why bother to keep the house if you aren't even sure if you can qualify to keep it or afford to? So I had a client, Sarah, recently, who came to me after months of negotiating to keep the marital home. When she was finally ready to refinance into her name, she was actually shocked that she didn't qualify. She had recently gone back to work as a pharmacist, but had taken a 1099 job instead of a W-2 position because she wanted a more flexible schedule, but she didn't have the required 2-year self-employment history, because lenders consider 1099 employees as self-employed, even if you're working full-time. And she needed the 2-year history in order to qualify. Sarah just assumed that since she was working full-time, that her income would automatically count towards qualifying her for a mortgage. So she had to renegotiate her divorce settlement and delay her refinance, which caused a lot of stress and extra mediation fees. Sarah told me later, if my mediator had referred me to a CDLP earlier, I might have avoided this. So she would have maybe looked for a W-2 position instead of a 1099, and she wouldn't have to go back to renegotiate those terms. So this is just one example of why working with a divorce mortgage expert is so important during divorce. Okay, so I think you have an idea now of what divorce mortgage planning is and how it can be valuable when you have a marital home or other property to deal with in the divorce. I'm going to spend a little bit of time now talking about some common issues that I see often with my divorce clients. There are lots, but for the sake of time, I'm going to just talk about 3 common topics that come up quite frequently with my divorcing clients when dealing with their mortgage. These have to do with qualified income, return to work, and assignment of debt. Okay, so the first issue is qualified income. So right off the bat, divorce clients are in a different situation than a traditional purchase or refinance transaction, because now they're trying to obtain, you're trying to obtain a mortgage on your own income versus with a partner. And quite often you need to buy out your partner's share of the home equity. So I need to look very carefully at all the income and make sure it's qualified income. So let me back up a bit and explain what qualified income is. So normally people assume, okay, income is money that's coming in every month that I can use to pay my bills. However, lenders look at income a little bit differently. Qualified income is income that counts when trying to obtain a mortgage or a loan, and it needs to have a history of being received and an expectation of this income continuing. So for example, it's not common, obviously, but let's say you bought a winning lottery ticket this month and you won $1,000. That's great. You can use that $1,000 towards paying your mortgage or bills this month. However, there isn't a history of receiving this money, and there isn't an expectation of this income continuing. So as a lender, I would not be able to use this income as qualified income. So child support and alimony. this is a very common income source for divorce clients, right? And you might assume that it can automatically be used as qualified income. But the timing and documentation of this needs to be specific in order for it to count. I, as a lender, use something called the 636 rule when it comes to support income. Lenders need to see a history of this income being received in the last 6 months and continuing for another 36 months. That's why it's called the 636 rule. So if your divorce decree says you'll be receiving spousal support for only 2.5 years, that doesn't meet that 636 timeline, meaning you won't be able to show 6 months of history plus another 36 months of continuance. And I can't use any of that income to qualify you for a refinance or mortgage, no matter how much money you're receiving. And unfortunately, I've had a lot of clients come to me after their divorce mediation or settlement, and they're absolutely shocked that they can't use any of their spousal support as income, and that they would have to go back and renegotiate with their ex. And, who wants to do that, right? So I remember this one client a while back who was scheduled to receive a huge monthly alimony amount, over, $30,000 a month in support income over 3 years. And she just couldn't believe that she couldn't use any of that to qualify her for a new home purchase because that 3-year duration was too short. Had she negotiated maybe a slightly lesser amount and spread that amount over the time she needed to cover that 636 rule, she would have been fine. Another issue I've seen, is settlement statements where it states that child support will continue for college-age children if they continue with higher education. I've had several clients say to me, yeah, look, on the divorce decree, it says I'll continue receiving child support until the end, of the 4-year college. However, lenders will say, well, the language says if the child attends college, and that if is problematic because that's not guaranteed income. It's dependent on if the child attends college. So in these cases, one tiny word can make the difference in terms of qualifying for a loan or not. Gray divorce is also another category that I've been encountering a little bit more often. And in these cases, I've had several clients who are semi-retired or working less or simply retired. And their lack of income or lower income sometimes is an issue with obtaining a mortgage. And one solution I've used to help some of these clients to be able to downsize or buy another property is by taking a distribution from their IRA. If they're 59 years or older, I can just take one distribution or withdrawal from their IRA and use that as income. And once the loan closes, they don't need to take any more distributions if they don't want to. So I've had one older client who, came to me last year and we did exactly that. We took a one-time $10,000 distribution from his IRA. We used that to help him qualify for a loan, and I was able to help him refinance his home using this income. Another common income source with divorce is a lump sum settlement. Some divorce clients just receive like a lump sum payment in lieu of monthly alimony, and that can also be structured to use as qualified income. But the way that's documented and structured needs to meet lender guidelines. So I recently worked with a client that was referred to me by a family law attorney, and this client completed her divorce 4 months prior, and she was looking to purchase a new house after selling her marital home. She was a stay-at-home parent in her marriage, and she didn't have, work income, but she did receive a big settlement of $1.5 million, from the divorce. So I was able to use a product called an asset utilization loan that uses assets to qualify for a loan instead of income. However, those assets need to be seasoned, meaning they needed to be in her name for 6 months before she could qualify for that loan. So I had to advise her to wait another 2 months before she could start looking for a new home, since she had been divorced, for 4 months at that point, in order to use her assets to qualify for that loan. So the main takeaway is, the way that regular people look at income can be very different from the way lenders look at income. So it's important not to make any assumptions about what income you have, but talk to a divorce mortgage advisor and really dig into those income sources. It's also important that a lender has access to loan products that suit these unique divorce situations, because many banks and retail lenders, they don't carry these niche loan products, which is another reason why I chose to be a mortgage broker. Okay, the next common issue is about return to work. So many people after divorce might look into going back to work, especially if they've been the main caregiver and they want to return to the workforce. But did you know that lenders look at part-time work, contract work, self-employed work, and full-time work? Each of these are looked at differently, and the length of history of the work and documentation are different in each of these situations. So even if you are, let's say, returning to work into the same field or going into a new line of work, that can also make a difference in a lender's eyes. And what if you went back to school to get another degree and now you're returning to the workforce full time? Could you qualify for a loan right away? Well, that depends on the type of position and if you work a set number of hours every week or if the hours vary. So again, the main takeaway is you just can't make assumptions that just because you're making money at a job that it can count as qualified income. And you can't make assumptions that money you're receiving every month can count as qualified income. Okay, the last common issue is about assignment of debt. So the way that debt is divided in a divorce settlement needs to be spelled out clearly. Otherwise, sometimes it can be counted against both divorcing spouses. So let's say, for example, you have an outstanding joint credit card bill for $8,000. If that's documented that the couple will pay this debt jointly, but it's not documented clearly that each couple have to pay 50% of that bill until it's fully paid off, each spouse could possibly be hit with that entire $8,000 debt against them. So the verbiage in the divorce paperwork is very important. Another example is if your ex still remains on the mortgage and you keep the home, their credit and borrowing power are still tied to that loan. But if your divorce decree clearly states that you're solely responsible for that mortgage and you have documentation that shows that payment history, lenders might be able to exclude that debt from your ex's liabilities, which means they can go and purchase a new property now without the marital home debt counted against them. So again, clear wording in the decree is really critical. The way that debt is assigned in the divorce can have a big effect on future mortgage financing opportunities. Okay, so those are pretty common issues that I encounter with my divorce clients. There are obviously more, but I think you understand my point. So now I also want to touch upon the current interest rate environment that we're in, because a lot of people ask me about it. And you might have heard the recent news about, interest rate cuts. And, right now we're actually at the lowest point, interest rates that they've been in the last 4 years. So that's great news that interest rates are definitely better. But I do tell a lot of my clients, there are certain things we can control and certain things we can't. So the one thing we can control is, looking at a reasonable monthly budget and reasonable monthly mortgage payment that you can afford. So if you're refinancing or purchasing a new home, that might mean, using a shorter mortgage term or leaving some more equity in the home, borrowing a lesser amount, or using an interest-only type mortgage. So I really look at each of my clients' individual situation and try to work with them on a manageable monthly mortgage payment. And I always remind my clients, you're not locked into the current interest rate. You can always refinance when the interest rates get better. And I have a computer program that I use that monitors interest rates for all my clients so that in the future, when there's a good time to refinance, I reach out and let them know. Okay, so one loan program that's been really popular with my divorce clients in the last year and this year is called the Divorce Fresh Start Program. And this program allows my clients to refinance now, and within 24 months, if there's an interest rate reduction, we waive our loan fees and you can get the next refinance for free. And I monitor those rates and I reach out when it's time for that rate reduction. So since I have a lot of my, your paperwork from the first loan, it's fairly easy to do that refinance. And offering this program has been really great for our divorce clients who, they're just trying to time the refinance in order to get a more favorable interest rate. And this has been a great way for folks to just kind of have a clean break from their ex, own their marital home outright if they're doing that, and just not be tied on this asset with their ex. Okay, so one other thing I want to touch upon is about loan assumptions, because I've been asked this question in the past. And a lot of people want to know, can I keep the same interest rate, basically assume the mortgage and just kind of cross off my ex's name off the mortgage? And that's a great question. But of course, we all wish life was simple like that. But with assumable mortgages, first of all, they're very rare. Unless you have a government-backed loan, like a VA loan for veterans or an FHA loan, the chances of it being assumable is very slim. There also might be some very steep fees associated with assumable mortgages. I had a client last year who was able to qualify for an assumable loan, but only if she paid, $12,000 in fees with her current bank to do it. And even then, she spent 4 months trying to assume that loan, only to find out that the lender needed proof that she would pay her ex his equity share before they were willing to do the assumption. So in the end, she ended up refinancing with me because she didn't have those funds to pay her ex his equity share. All right, so I have a case study. I know we're kind of getting to the end of things. I have 2 case studies that I want to share with you to kind of wrap up. So the first client, Kelly, she called me for a consultation. She was going through a divorce and she was, ready to refinance her home after this. Kelly was a stay-at-home parent, so her main source of income was alimony and child support. However, she called her credit union first, and the lender there wasn't used to working with divorce clients, and the lender didn't realize that alimony and support income is actually not taxed. So you don't need to pay taxes on this income, and it can actually be grossed up. And what that means is for every dollar that Kelly was receiving, I can actually count it as $1.25 income, essentially giving her credit for 25% more qualified income. So her loan got rejected from the credit union and she was just short this income to qualify for the refinance. And to make things worse, this took about 3 weeks to get this answer. And her attorney didn't realize that in order for us to use the alimony payments, we needed that history of 6 months receipt and that future continuance of 36 months, that 636 rule I talked about. So by the time Kelly found me, she didn't have the 36 months of future payments, and she couldn't qualify for a refinance at all. So she had to go back to her attorney and try to get her ex to agree to extend the alimony payments. So, that was really difficult because she really wanted to avoid that. And so this is just another situation where she really could have used that advice when negotiating this. My second client, Anna, she had gone through her divorce about 1.5 years ago, and she decided at the time to stay on the mortgage with her ex because they had a 3% interest rate on their marital home, and she didn't want to give it up. So they decided, we're not going to deal with the refinance, and we're just going to stay on the mortgage together. She was going to stay in the house with the kids and pay the mortgage, and he rented a place nearby. But both their names were still on the mortgage. And the divorce decree says Anna would be responsible for the mortgage payments, and her ex would allow her to buy him out of the house in 18 months. So 1.5 years later, Anna calls me and says, you know what? My ex changed his mind about the house. He met someone new, and this new girlfriend is also divorced with her own children. And now they want to consider taking over the house instead of allowing Anna to refinance it. And the ex refuses to sign any paperwork to allow the refi. So now Anna needs to go back to her attorney and, go back to the court to kind of enforce this divorce decree. But that involves money, time, and stress. And now it's most likely that the judge will enforce what's written on the decree, but her ex is arguing that now his life circumstances have changed and he wants to re-examine the house situation. And he may or may not win that fight, but they're still in the process of negotiating that. but this is why, I think it's pretty important to have a clean break on what normally is the biggest asset that you own, pretty soon after the divorce and not kind of drag it out for too long. Okay, so to conclude, I hope you learned a little bit about what divorce mortgage planning is and how it can really be valuable. One last comment I want to make is just, people sometimes ask, well, this is great, but how much does it cost for me to consult with you about my mortgage options? And I offer complimentary mortgage consultations, and my compensation is through originating a mortgage or helping with a refinance. And the consultations, I will help advise that and determine if that is a good idea. So it doesn't cost anything to talk it through with me and just at least understand your options. And I really have the heart to help folks through this situation. I've had a lot of good friends and family members who've gone through divorce, and they really needed this advice on their homes and mortgages. So, please feel free to reach out to me if you have a specific, situation or questions that I could help you with. Thank you.
Awesome. Thank you, Joanna. So, Reba, you're up next.
Yep.
So, please share your expert insights on the real estate side of divorce, including key strategies and common pitfalls.
All right. And for anyone, if you didn't see it in the chat, though, Angel was kind enough to put Joanna's email in there if you did want to send her an email. We also will put my email in the chat so that if you want to meet both of us at the same time so that you can go through your scenario just once instead of twice, we'll put my email in there and you can send a message to both of us. But let me go ahead and get into my presentation here next. Right. Okay, everybody able to see that okay? All right, fantastic. So let's get right into it. Your home does not have to be a battleground. And right now, your home is probably your biggest asset, right? So, but it's also potentially your biggest source of conflict when going through divorce. And I've watched that pattern play out hundreds of times, and I've learned exactly how to change it. I'm Reba Haas, certified divorce real estate expert. And for the last 23 years, I've specialized in one thing, helping people make smart property decisions when their world feels anything but stable. And here's what I know. You're not looking for the perfect answer. You're looking to avoid the mistake that keeps you up at night 2 years from now. So let me show you exactly how to do that. So this is the reality I work in every day. And these aren't rare edge cases. They're the norm in divorce real estate. So here's the truth most people don't realize. In divorce real estate, neutrality isn't a nice to have. It's the difference between a clean transaction and a conflict that costs you thousands and months of your life. So let me explain why that matters. When you're going through a divorce, real estate decisions get complicated fast. And here's what makes them different. High emotional and financial stakes. This isn't just a house. It's your biggest asset, but it's also potentially your children's stability and a decision you can't easily undo. Like when I'm helping people buy a house, we talk about the fact that this isn't like a Gap t-shirt. You can't just turn around and do an exchange or change your mind. You might run into having one or both parties that become uncooperative because even amicable divorces hit friction points when property is involved. You're dealing with court orders and timelines that must be followed. So you're not just making a choice, you're operating within legal constraints, and those don't care about your emotional readiness for this. There's equity division and debt resolution. So it's the who gets what, who's responsible for what, and these questions don't resolve themselves. And here's what complicates it further. If there's children in the home, you've got timing for school, age considerations. Maybe they don't even know about the sale or even the divorce yet. There are potential new relationships entering the picture. Joanna just gave us an example of that. There's possibly safety issues or no contact orders, mental health challenges. We might have someone who's committing waste at the property, which the definition of that is damage or neglect of the property, or you're seeing anger playing out in real time. And discussions about house prep costs. That is an area that I find frequently is not discussed during the conversations with attorneys about the costs of the divorce. Excuse me real quick. So this is the reality I work in every day. And I will say that that issue around costs of prep not being discussed during that, I've seen that play out. Joanna just gave an example where somebody had to go back to court. We had a woman last fall who called us, and sure enough, she had a very highly contentious divorce. And she realized in her intake conversation with me, she's like, oh no, I'm supposed to get the monies out of the sale of the house, but we didn't even talk about who pays for the cost. And this was about a 3,500 square foot home that needed a lot of updating. So that was a significant thing for her to have to go back, and they went back to court for that. So what is a CDRE and why does it matter? So certified divorce real estate experts are trained in being neutral third parties and in removing bias from the sale process. Neutrality isn't a personality trait. It is a trained ethical commitment, and it changes the outcomes. We receive training around reading court orders, managing communications to all parties, including attorneys and mediators, documentation expectations for court where needed, and training about the courtroom process. And we have a specific CDRE addendum that helps eliminate a majority of conflict points that often show up in divorce real estate sales. So here's a comparison that matters. So CDRE versus a traditional broker. So the CDRE, trained to be neutral. We have a very high level code of ethics that's above the realtors organization. In part of that, we are not allowed to become a buyer or a dual agent. And I'm happy to answer questions later about what that might mean if you're curious. We're trained on the divorce process. We support attorneys and mediators with updates that are scheduled and don't add a lot of additional costs to you. We maintain a documentation trail. We provide ongoing support that in some cases may last for years, because as Joanna pointed out, sometimes the sale of the house isn't until much later. We assist with title reviews. We're trained to read court orders. And again, the CDRE addendum and our process is in place for managing the divorce sale to minimize conflict and complete the transactions. So compare that to a traditional broker. They are absolutely not trained to be neutral. It's not even a discussion in traditional real estate. And that person may even have a bias. This is one of the challenges sometimes when somebody hires like a friend or a family member to support them through this process. Frequently in real estate, you see self-serving interests. Many people will try to take advantage and be like, oh, maybe I'll just try and buy the property. Or they get investors and they get involved in those investors. That can become a self-serving interest. No training for the divorce process. I can tell you for a fact in 23 years of real estate, there's a couple of like half-day classes that give you nominal information about this, but nothing like what the CDRE training is. Often other agents want an easy and fast sale because they just want to get to their commission. That may not be the best thing for you. They may not be good with their documentation trail, which can be a problem if you have to go to court. They may give up confidential information, which I have heard directly from other agents who have told me that they're like, oh, this couple's divorcing. They hate each other. They'd be happy to take less money. My clients got to take advantage of that at one point. They're taught to avoid reading title reports in a lot of companies. They are not trained to read court orders, and they don't have a specific process for divorce sales. And very importantly, there is no addendum to assist in preventing conflict, because that addendum that is specific to CDRE covers things such as showings, how pricing is handled. What if you have to do price reductions? What is the preparation going to be? It gets into a lot of detail, and it provides that opportunity for the CDRE agent to be able to go back to the attorneys if necessary, if one or both parties become problematic in trying to move the case forward. So, what I'm saying is traditional agents are not bad people. I'm just saying they're not equipped for the specific challenges that you're facing. And when real estate gets tangled in divorce conflict, good enough isn't good enough. So let me tell you about a couple I worked with last year. So both were convinced the other was trying to cheat them on the house value. The husband wanted to list at $650. The wife wanted $550. And they had been fighting for months. In fact, this couple didn't actually even speak to each other. They were in the house together with 3 of their 6 children, and they didn't even speak. They would either text or make their children send messages for them. Very uncomfortable. So nothing was moving forward. So I got a phone call from the husband. I got involved, and I met with each of them separately. I showed them the same comps. I walked through the same analysis. I answered the same questions with no pressure or agenda, and just the data and what it meant. Also talking about who the perfect buyer was, because you're probably looking at that price and wondering in this area, this house was in deep despair, I think is the best way I can describe it. There were a lot of safety issues, a massive mold problem, a hoarding, and kind of health and sanitation issue going on. So we couldn't even sell to the traditional public because of the condition of this home. So that's why the price point was where they were at. So we walked through our report, and within 2 weeks, after some back and forth, they agreed on $595, and we sold that house in 18 days. So that's what neutrality does. It removes the fight from the facts, and it takes emotion out of the equation so logic can do its job. And it protects both parties from making decisions they'll regret when the dust settles. So neutrality protects your future. So now let me walk you through how this actually works in practice, because understanding the process is how you protect yourself from mistakes. So first of all, when do you bring us in? So ideally, early in the process. So hopefully before litigation, maybe even before filing, when the parties are still hopefully cooperating. And that's when we can do the most good. But we can also come in during litigation. That's not uncommon. In all of these situations, we're assisting with valuations, condition evaluations, and recommendations for preparation. We're still managing each spouse separately. We don't have dual meetings. They're all done individually. And sometimes if we haven't been brought in earlier, of course, then, and this is sometimes the hardest, it's after the final court orders are completed. By that point, a lot of damage may already be done. So kind of like Joanna alluded to on one of her cases, sometimes it's the people involved, but sometimes it's the attorneys who make mistakes. So this is why it's really good to have early engagement where you can, because it matters. And I want to reinforce this message. The earlier a CDRE is involved, it's better, because like insurance, you want it before you need it, because the cost of waiting is real. So here's the reality is 70% of divorces have real estate assets, which is likely why you're here. You're probably in that 70%, right? And the court orders give you 2 options, sell or keep. So division of proceeds or a buyout. But here's where it gets tricky. Concerns I see constantly. Values coming from sites like Zillow or referencing a neighbor's sale, because these can skew reality and they can create attorney liability, which I can tell you they don't want. It may trigger a spouse who can't qualify for the buyout, but doesn't realize it until it's too late. You can have quit claims that damage the out spouse, leaving them financially exposed. And here's one most people never see coming. We call it the upwards of $50,000 capital gains trap. So let me explain how this happens. So when you're married and you sell your primary residence, you get a $500,000 capital gains exclusion. But once you're divorced, that drops to $250,000 per person. So now imagine this scenario. You bought the house for $300,000 and now it's worth $700,000. That's $400,000 in capital gains. So if you sold it while married, you're covered. But if the divorce is structured wrong, if one spouse keeps the house temporarily, then sells it a year later as a single person, they're suddenly on the hook for taxes on $150,000 in gains. And at current capital gains rates of like the most common category, that's a $22,500 tax bill that could have been completely avoided. And here's what makes it worse. Sometimes the divorce decree assigns that tax liability to the in-spouse, the one who kept the house. But if the settlement wasn't structured carefully, the outspouse might still be legally responsible for half of that tax bill. So let's say that's you, and you think you're done with the house, and you've moved on, and you're rebuilding your life, and then the IRS comes calling, asking for $22,500 you never saw coming. These aren't small mistakes, and they're the kind that follow you for years. Okay, so what's a CDRE actually doing for you? How do we work? What value do we actually bring? Well, we help you understand the options around your home, not what you should do, but what you can do and what each choice means. We provide data for informed decision-making, real comps, real analysis, not guesses or online estimates. We reduce disputes over value and listing strategies, because when both parties see the same information, agreement becomes possible. We offer pre-sale consultations, much like Joanna does. Before you commit to anything, we help you understand what you're looking at. And here's what those pre-sale consults include. We provide a fair market value, also known as a CMA, to assist in asset division that you can talk to with your attorney or a CDFA. We coordinate with lenders like Joanna to determine if a buyout is even an option. We determine what pre-sale work should be done and get you real cost estimates for review. We can work within temporary orders, and we understand sale timelines and post-divorce tracking. And we keep the reason for the sale confidential because your privacy matters. Now let me walk you through the actual process, because transparency, we believe, helps build trust. So step one, the intake meeting. These are done individually with each spouse to maintain neutrality. It also helps uncover any unforeseen issues that might complicate the sale. We find talking with people individually helps them to open up. Something they may not say in front of you, they might be willing to say just in front of me. And oftentimes one spouse tends to know more information about the house and the debts than the other. Step two, we do a house walkthrough with the in-spouse. We take photos, which are not the marketing photos. Those are strictly for us and also for potentially the courts if we're required to provide them for any reason. We use that to help develop the market analysis piece and to create our list of any preparation recommendations. Step three, we finalize that CMA or fair market value created with the recommendations, and this is your baseline. Step four, we order title, because we have to review the title, which is the ownership of the property. We get that reviewed. If your attorney hasn't already done it, we will go ahead and order title and review it for potential issues which could impact the sale or proceed expectations, because we're looking for things like liens or other issues that could, hang up your sale. Step five, price and prep. If the property is selling soon, we set the condition period, how soon we'll have it ready for market. If time is allotted for a later sale, we set a calendar for the follow-ups for that. That's often like we see cases where, say, there's children in the home and they're waiting for school to get out, or perhaps even for a child to graduate high school, that type of thing. Step six, updates to attorneys as needed. So once we go on market, I mentioned earlier, we do these staged outreach to the attorneys. And when I say that we do this staged outreach, this is just notifications. We are not sending them lots and lots of documents or anything else for review, because we know that charges you money. So these are things such as, we have completed the preparations. We're now moving on to these things. Okay, now we're listed on market. Okay, now we have an offer. Now we're under mutual acceptance. We've completed inspections. We're through the appraisal process, and now we're at closing. These are just so they know from a timing perspective when it looks like your proceeds are going to be ready for you. And that gets to step 7 in the closing process. Once we have that all completed, proceeds are wired as noted in the court order. Because sometimes they go to you guys, but sometimes they go to an account being held with the attorneys, because it just depends on what's going on in your own particular case. So it's clean, it's clear, and then it's done. And now here's something else most people don't realize. It is a myth that a judge might decide who your agent is. In some rare cases, a judge will be asked to do that, but that's typically in super high conflict cases. So you have more control than you think. So how is an agent or CDRE chosen? There are 4 common paths. So 1, parties mutually agree. Maybe it's someone you both already know and trust already, and we hope this stays friendly, but it may not result in the best skills for the job, and it could eventually turn into bias. 1 party puts forward a name, usually a friend or family member. This I have seen frequently go bad fast because the other party may not trust who that individual is. And I can't even begin to tell you how many times I've been called in as the second listing agent because that first one tanked. And that agent was actually working against the interests of the parties. A lawyer can make a single recommendation. And if both spouses agree, great, okay, you move forward. But that attorney may or may not know the skill level. It may just be someone they know, right? They may or may not have tested them. Or 4, the lawyer can provide 3 names to opposing counsel and their client, and then they just pick one of the 3. So now it's a little bit of luck of the draw. So the point is, you're not powerless here. You can ask questions, you can request neutrality, and you can advocate for a process that protects you. So let me bring this all together. From this point on, every housing decision you make can either drain your resources and extend your pain, or it can accelerate your healing and preserve what you've worked for. And the difference is neutrality. Neutrality protects your future. So you're navigating one of the hardest transitions anyone can go through. And you're making high stakes decisions about your biggest asset while your brain may feel like it's running on fumes. I see that, I respect that, and I've been through it myself a couple of times. And I believe, like you do, that you deserve a process that protects you from mistakes, not one that adds to the chaos. So your path forward starts the moment you ask the right questions and demand the right support. So here's what I want you to do this next week, if you can. Ask your attorney if they've ever worked with the CDRE. And if they have, ask about their experience. And if they haven't, call me. Because the earlier you bring in neutrality, the more you protect. So that's it. 1 question, 1 call. Your home doesn't have to be a battleground. It can be a decision you make with clarity and close with confidence. Neutrality truly protects your future. So thanks for listening. We are open for questions.
Yes. Okay. So I see here there's 2 questions. This is one is from Patricia. Been in the home 20 years. What's a realistic time to get home cleared out before price and prep? This is for Reba.
That is a great question, and it deserves my favorite answer in real estate, which is it depends. Because yes, 20 years in a house can mean quite a bit of things, but everybody manages their home differently. So honestly, Patricia, that would be a thing that, I've had some people who have their house so impeccably clean and ready to, and maintained that we were able to get on market in a week. That is rare. That is one time in 23 years that has happened. Typically, it's several weeks, if not several months. It also depends on where you are at in your process and whether or not you have divided your belongings already. Because what I don't know in that question is is there an in-spouse and an out-spouse? Are you both in the house currently together? Does everyone have all their belongings separated out? And those become some very important questions to go through discovery and figure that out. And if you're curious, for more detail, I'm happy to, do a private consultation with you if you'd like. I can even do like a video chat if somebody wants to walk through their house to start, and then I can kind of give you an idea. But I can tell you, I've been in this house where I'm doing this presentation right now. I've been here I'm going on my 19th year. And I can tell you, it would probably take me several weeks at a minimum to get myself ready, if not a few months. And I can tell you also from experience working with hundreds of sellers over the years, that is a realistic thing. And if you're trying to target a specific timeline to go on market, you really want to work backward from whatever that timeline is and determine whether that is realistic or not. But I also want to encourage you that there are some people who tend to push certain times of year to go on market. And depending on what kind of house you have, maybe summertime is the right time for you, but I can just tell you that houses sell all year long. So don't worry or let it add stress to you if you don't feel like you can meet a certain time window, because actually sometimes in the fall and the winter, you have less competition and more serious buyers. So it just kind of depends.
Okay, thank you for that answer, Reba. So, another question for you. Can you clarify what the CDRE addendum covers?
Yes. So that addendum, which is specific to CDRE, it is not available to other Northwest Multiple Listing Service members, which all of us real estate agents hold membership there. And that's where we post our listings. This is specific to CDRE and the Alumni Institute that creates this designation. So in it are some of the things that help us prevent spouses kind of going off the rails. Because it has information about how we're going to handle pricing, how we're going to deal with price reductions, what are showings going to look like, what is the requirement for access to the home, things like that. That's the problem sometimes when we get brought in late or after the divorce has been finalized, because many times, strangely enough, a lot of family law attorneys have never sold a home. And so they don't even know that these are issues. And even though they may have run into this through their workplace, sometimes of, someone pushing back and not allowing people in and things like that, they don't always have it in the court order. So we have it in our listing agreement, the requirements of the parties that we're working with. It helps a lot. And I can tell you, if they try and go against things that are inside of that, there's also, in my world, we like to call it the grenade email. I'm using a lot of air quotes today, sorry. But the grenade email is when you have a party who is not playing nice in the sandbox any longer, and we can tie it back to all of these requirements, and then we can reach out to the attorneys to say, hey, we need some help moving this forward because this person is now violating. So we try and do everything we can to prevent high conflict, but sometimes it kicks in because people are usually very emotional. And I get it, because I can tell you for a fact, my last husband, I've owned this house since before he and I met. And he made a threat during our divorce that he wanted to try and come after my house. And I can tell you, I still remember how high my blood pressure went in that moment of just him suggesting that to me. So I realize and recognize what people are going through. And so we try and really work to minimize. And I know when I'm working with the two individual parties, I'm trying to keep it light, positive. We're not getting into the details of he said, she said, or what happened. Like, we're keeping it very professional throughout. And that makes a huge, huge difference.
Amazing. Thank you, Reba, for that explanation.
Yeah.
And I do see here on the chat that it's the questions that we have, all of
Okay.
the questions that we have for today. And that wraps up our Q&A.
Okay.
So big thanks again to Joanna and Reba for sharing their knowledge and to all of you for being part of today's session.
Yeah.
So Reba and Joanna, please feel free to share any final thoughts, parting tips, or appreciation with the group to wrap things up.
Joanna?
I just appreciate folks just wanting to learn about, I think their options, and I hope that this was informative to just give you next steps on what to do and how we could advise you. So we're really happy to, talk to you about your specific situation,
Yeah.
and kind of go through that. Yeah. And we could do that jointly or separately, whatever you guys are comfortable with.
Yeah. And I also want to add on to what Joanna was saying. One of the things that we both have found is that when people, one, come to sessions like this, but then also have their individual consults, because you're in a state, depending on where you're at in your divorce process, you're often in a state of like, I don't even know what's going to happen. Like, I'm overwhelmed and I still have to go to work and I have to deal with these people and I don't know who I can talk to. And in those moments, you're guessing. And what's great is when you have the opportunity to learn like what you did today. So I commend you for coming and educating yourself. I'm a big fan of that. And then when you have that individual consult, the relief that you can have of like, okay, this makes more sense now, or at least I know what path I need to take. Because that it can make a huge, huge difference about how you see things going forward. So thank you everyone for being here today. We appreciate it. And we'll look forward for anyone who wants to have those conversations to have an opportunity to chat with you. And also just, you're going through a thing and, we get it. And we hope that you're able to get through this as cleanly and peacefully as possible. So thanks for being here. Good night, everyone.
Good night.